Hello, everyone, and welcome to another Out of the Box Tech Tuesday. Today's webinar will review and discuss Avalara's 2024 Tax Changes Report. Out of the Box has a team of bookkeepers and accountants excited to help your business grow through custom-tailored bookkeeping and accounting services, discounted software solutions, or training for your team. We encourage you to reach out if your organization is looking to optimize its infrastructure. Today, we welcome Jared Clark of Avalara as our presenter. Jared joined Avalara 5 years ago in his first post-collegiate role. Jared attended the University of North Carolina at Wilmington and lives in Lewisburg, North Carolina, which means he is a diehard Carolina Hurricanes hockey fan. Jared just celebrated his marriage to his wife, Sarah, in October. Congratulations, Jared and Sarah. Has a dog named Coda and a cat named Gravy. Jared's 5 years at Avalara has armed him with a wealth of expertise in sales tax regulations, so we encourage you to engage him with any questions you might have. As for me, my name is Jeanette Schwartz-Bertrand, Director of Marketing here at Out of the Box, and I will be your moderator for the day. Just a few housekeeping items before we dive in. This session is being recorded to give you the opportunity to really engage and ask questions. The recording will be shared with you as a resource after the webinar where you can revisit any key points and information you'd like to review, share it with your colleagues, or keep it for future reference. There will be time for questions at the end of the presentation. However, if you're hoping to dig a little bit deeper into something that we cover or need some clarification, feel free to chat those questions to us and we can address those in real time. A little bit about Out of the Box, if you haven't joined us before, or maybe it's been a little while. Here at Out of the Box, our mission is to empower entrepreneurs with the QuickBooks-based financial tools, services, and insights they need to thrive. Out of the Box is the premier choice for QuickBooks accounting services, boasting over 30 years of experience and a track record of exceeding the expectations of more than 50,000 satisfied clients. Our comprehensive accounting solutions save you time and money while providing you with the financial accuracy, security, and insights necessary to grow your business. As an elite QuickBooks solution provider, we are able to offer you exclusive discounts and pricing, so be sure to connect with us before purchasing your QuickBooks solutions. With that, I believe I've covered all of our housekeeping items, so I'm going to pass the baton to Jared so he can get started. Jared, you can go ahead and take it away.
Great. Thanks so much, Jeanette. Thanks for having me on today. All righty. So let me get my screen ready here. All righty. Good deal. All righty. So thanks again for having me on. Again, I joined the Avalara team in 2019. Currently live in Lewisburg and I'm a diehard Carolina Hurricanes fan. I included my picture of my dog, Coda, whom I love greatly. So I thought I would include that here. So the agenda for today, we're going to cover a couple of things regarding tax changes for 2024. A lot of these things are going to be surrounding how technology is evolving and how legislation, countries all around the world are changing how they're doing tax compliance in order for the new trends of the digital age to be taxed correctly. So we're going to go over the digitalization of international tax, latest in economic nexus and marketplace facilitator laws, 1099 updates, state-specific updates, tax law, software taxability trends, taxes on streaming, and then I'll go a little bit into how Avalara can help, and Q&A as well can go to Jeanette, and we'll have a little bit of time at the end to go through some questions. So again, sales tax is evolving around the world, really to keep up with how rapidly technology is changing in the digital age today. E-invoicing mandates are spreading globally. So if you're considering expanding your business internationally, there are some things that you're going to have to account for. E-invoicing is becoming the primary method for these countries in the EU to be monitoring the sales tax that is paid to them, making sure that it's valid and correct. So you're going to have more transparency there between the government and those that you're selling to internationally. It's essentially streamlining the exchange of invoice data between business partners, enables those tax authorities to retrieve that information. and that will further be driving invoicing mandates. Already, Israel, Poland, Romania, and Spain have e-invoicing requirements going into effect in 2024. So it's good to take into account now. You may not be able to do business in certain countries here soon if your business doesn't have the ability to issue and or receive electronic invoices. Switching to an e-invoicing system requires planning. It's important to consider your current invoicing as well as your future invoicing needs, be it invoice volume and customer location, so you can implement a system that can handle existing and anticipated regulatory requirements. This is complicated by ever-evolving and ever-multiplying e-invoicing mandates. So it was supposed to go into effect in the beginning of 2024, but the e-invoicing requirement for the EU has been delayed until 2025. So you still have time to address these invoicing concerns for the next year or so before it becomes a requirement for you to be able to do business internationally. Uh, uh, Things are getting more complicated when it comes to selling internationally, but also they're getting more streamlined. So the quicker you can move to a e-invoicing format, the better, because they're going to be streamlining VAT registrations to be a single registration, updating rules for their platform economy, and be able to do this in real time. And again, this is going to be delayed, but will be required at the beginning of 2025 next year for doing business internationally in the EU. Even the US is considering e-invoicing. There's a couple of different programs that have been trying this out, where they're kind of taking strides towards moving towards this digital age of invoicing. While we don't currently have any mandates requiring this in the US now, state governments are paying attention to what's going on around the world, and you may begin to see changes here soon. So these just another reason to be prepared for e-invoicing and how technology is going to be changing the tax environment moving forward. So now we're going to cover a little bit about economic nexus and marketplace facilitator updates. I work primarily with small businesses, often utilizing our connection with QuickBooks. And I've seen a substantial increase in startup companies, small businesses trying to move to be a marketplace model. But what they don't realize a lot of the time is that there's a large tax burden that comes with becoming a marketplace because of the marketplace facilitator laws that have been enacted in the US the past few years, where you're essentially taking on the tax requirements of all of the clients that you sell on your site. Also, I've seen a lot of businesses still today are not doing what it takes in order to prevent economic nexus from affecting their business. With each state having its own rules and regulations, it's creating more of a barrier to entry for small businesses to be able to grow efficiently and cost effectively. So 45 states plus DC and Puerto Rico have adopted marketplace facilitator laws. If you don't know what marketplace facilitator laws are, essentially it's putting the tax burden on the marketplace itself to collect and remit for the sellers that use their site. So this is spread all the way across the US. I believe this came out in 2020, 2021, and already 45 states have enacted this. So they're revisiting their definitions of what constitutes a facilitator. Just another thing that states are doing to try to get ahead of this technological age that we're in and how the economy is moving really quickly towards a platform economy. And again, it's going to create barriers for small businesses that want to get a part of this, because if you have, Amazon and Walmart, for instance, they're going to have their whole tax department and lawyers at their disposal in order to properly be able to conduct the taxes properly for the sellers on their site. But for smaller businesses, that's obviously much of a bigger load to carry. New 1099 reporting requirements. online marketplaces, payment apps, and credit card companies, you're now going to be seeing changes in the threshold for needing to get those 1099s. The IRS will be lowering their threshold in the coming years. Right now, it's $20,000 in payments and over 200 transactions to be required to do this. But in 2024, the threshold is dropping to 5,000, and then again in 2025 to only $600. So if you are a marketplace and you are not aware of these changes, that's going to be something that you need to address here in the coming years. So, and then let's go over briefly about economic nexus thresholds and when marketplaces come into play. So, and a lot of these rules have been changing the past few years, where each state essentially is operating like their own country in the US. Yes, you may be able to drive to Texas and Colorado and wherever to sell your goods. There are things that you have to take into account when it comes to economic nexus and these thresholds that change. Each state has their own kind of thinking behind economic nexus and when it's required for you to get registered, even without taking your car to a different state, having any sort of physical location there. As you can see with this map here, there are some states that will calculate your economic nexus threshold triggering through gross sales, including sales made through a marketplace. I talk to companies all the time where they have different selling channels where you may be selling on your Shopify store, and then you make wholesale invoices through QuickBooks, and then you have an Amazon store as well that you sell to. A lot of states will take all of those different selling channels into account to whether or not you've triggered that nexus threshold. So you may have to go and get registered in these states based upon the total amount of sales that you have through all your selling channels. And then in some cases, you may only have to take some of your selling channels into account when it comes to triggering economic nexus. So, and as you can see with this map, gross sales excluding sales made through a marketplace, just retail sales, only taxable sales can trigger a nexus threshold. So there's just so many different rules when you look at it from this view to see how difficult it can be for a lot of clients like that I speak with to be able to determine whether or not they have any risk in an outside state, because it's all handled differently and it's almost like operating in 50 different countries rather than it being in one country. So, and like I said, 5 years later, economic nexus is still a challenge. According to a 2023 Avalara survey, 72% of respondents think that online sales tax laws are complex and confusing. And I would say the rest of that percentage just doesn't know what sales tax is like around the US, because, and that was one of the first things I realized when I started working at Avalara was that just how complex every state is when it comes to how they tax things. Uh, for example, you can have a candy bar in, I believe it's Minnesota, uh, that is taxable if it has flour in it versus if it doesn't have flour in it, because then it is a food product if it has flour. Um, Several different types of crazy laws. In New York, you have bagels. If you slice the bagel, it becomes taxable. If it's just a plain bagel as a whole, then it's non-taxable. Uh, just to see all these different discrepancies of different products and taxabilities across different states, it's just crazy to me. And then 40% of respondents says that economic nexus has increased the cost of managing tax requirements. In a lot of cases, you may have companies that are just operating within their state. They maybe just be doing services, and then they really don't have a whole lot to worry about with economic nexus. But those companies that are selling retail online, selling widgets across state borders, that's really where you're going to create the most risk, and where a lot of our clients, will end up seeing costs associated with those expanding requirements for them. 72% of respondents have invested in technology to help with the calculation and reporting of online sales tax requirements. I know QuickBooks has functionality with sales tax calculation. You're seeing more and more invoicing systems that are coming with sales tax calculators and Nexus economic Nexus triggering functionality. So it is really becoming more apparent to companies these days. I still do get a lot of folks that I talk to that still are not aware of these changes with economic nexus, but it is still very prevalent today. So all 45 states with a state sales tax plus District of Columbia and Puerto Rico have enacted economic nexus laws. And that was a new one for me. I actually didn't know that Puerto Rico has now enacted economic nexus. So that adds two more places that had previously not had a threshold to now have one. But the good news is that states are reconsidering nexus thresholds and the thinking behind it. So in a lot of states, you have a threshold like my state, North Carolina, is 200 transactions or $100,000 in sales can trigger the nexus threshold. A lot of states, 10 actually, have dropped the 200 transaction portion of that requirement. And that really helps with small businesses that I speak with, because a lot of them do a large number of invoices per year, but they do a very small amount in revenue per invoice. So this is actually a huge relief to a lot of companies, because in the past where you have to get registered for only 200 separate transactions, now that threshold is just going to be $100,000 in sales in a given year. So that's actually some positive news. We don't get many positive news for sales tax updates, so it's good to see that they're helping out the small business in this case. So and then here again, the economic thresholds by state. And if you're unaware of this and need more information on this, I do encourage you to visit our website at any time. We have so many helpful tools. We have a sales tax risk assessment you can do for free, which will essentially calculate all of your sales from the past year and tell you if you have any states you need to look at registering in based upon your sales volume and dollar amount. So as you can see here, you got only 3 states where it's $500,000 to be required to get registered. And then most of the other ones is $250,000 or $100,000. And you still have a lot that are the 200 transactions as well. So it gets very confusing across different states, and especially for small businesses, again, it's difficult to keep track of this, and that's why automation is so important in this day and age. Retail delivery fees, I'll just cover this really quickly, and this is also going to be a good example for how complex sales tax is getting around the U.S. In Colorado, if you do business there, you probably already know what I'm talking about when it comes to complexity. So Colorado is now requiring that a retail delivery fee be added on to your customer's invoice to be paid if you're using a vehicle to take it to them, and if it's a taxable good. This is effective May 4th, 2023, where qualifying new businesses and businesses with less than $500,000 in sales during previous year are exempt from. In July 1st, it jumped from 27 to 28 cents. And the same thing really is happening in Minnesota as well. So these states are looking for different ways to get more revenue. And as many of you may know, that sales tax is the #1 source of revenue for states. And they're not going to make it easy on you. They're going to get their money where they feel that's owed, and they're not going to give you a red flag when you go there and forget to do it. Just for example here, I pulled this from the Colorado Department of Revenue website. This is all just to determine whether or not this applies to you. And I won't read through all of these questions, but it's essentially just this giant roadmap that you would have to figure out as a business to take your time out of your day to figure out whether or not you have to charge a measly 28 cents on your order delivered to a Colorado customer. So you can see how a lot of these changes and rules really take a lot of time out of your day. You know, it's costly. It's, this and that, but the number one thing I think is inefficient. So staying up to date on all these rules and regulations and figuring out whether or not you need to be paying tax here or a delivery fee here, they're just all things that take away from you operating your business the way you want and you growing your business the way you want. Other notable updates, Illinois being challenged in court over the issue of destination and origin sourcing. Currently, there are 12 states that have origin sourcing, which if you're not familiar, like in states like in Arizona, Illinois, Mississippi, Ohio, uh, there's origin-based sales tax rules. So you would take the sales tax rate of your business's location rather than the business also located in your state's destination. So that's currently being challenged, and Illinois wants to make it a destination-based state, which is being challenged in court currently. Virginia now only allows law firms within the state to help businesses obtain beverage alcohol licenses. Maryland and California both enacted bottle fees that in and out of state sellers must adhere to. And really, that's the whole crux of economic nexus is businesses that have been operating for years now have only been under the impression that they need to register in new states based upon a physical presence. I have never been there before. I sell to customers located in that state, but why would I have to adhere to Maryland and California's rules? Well, now with how these tax laws are changing, it's bringing us all a little bit closer together because now you're going to have to adhere to whatever rules that these states are imposing if you do enough business there. So these are all things to take into account. And just to add to the complexity of doing business in the day and age of today. Software and digital product taxability updates. I see this all the time. Every year there's a new rule. There's a new form of software. I had no idea that software as a service could have so many different forms based upon the taxation across the US. So states are working to redefine their tax laws to be able to follow the technology trend that is very apparent today. And this has been going on since I started at Avalara 5 years ago, and they're still working on it. So there's just many different ways that each state wants to bring in a new taxation for software, bring in a new taxation for digital goods. I believe we touch on streaming next. They want to assert that streaming providers now owe sales tax due to physical presence because they are using broadband and fiber networks to bring the streaming service there. So really every state is trying to figure out the best way to try and get their money, in this technological day and age, like I said. In Missouri, a state judge recently ruled that cities have the right to sue under state law for this. The localities are not having much leeway when it comes to this new rule that they're trying to pass, but they're working hard at it regardless. So kind of to summarize everything we've talked about today, obviously there's a lot of complexity that exists in today's day and age when it comes to tax compliance. It creates burdens for small businesses. It's difficult to get over these roadblocks because on the other side, you can sell internationally. You want to grow your business. You want to expand how many customers you have, grow your sales, but there's a lot of roadblocks that are in the way of you doing that efficiently and doing that in a cost-effective way. So if you want to sell internationally, you want to start a marketplace, you want to expand your business, then automation really is going to be the next best step for you to make to prepare for all of these changes that are coming down in the next few years. So what Avalara can do is essentially you're passing along the burden of sales tax to an automation company like Avalara, where we can track your nexus, where you don't have to go to that map and say, okay, are we going to combine our marketplace sales, our online sales, and our wholesale sales to be able to determine if we've triggered an obligation here, and also to sell internationally as well. we're able to automate that entire process, provide you with registrations where you need to be registered, comply with the e-invoicing mandates in the EU that are coming down soon, instant tax calculation, exempt sales data, filing automatically. Really, our goal is to make your process more efficient and make it so that you're not the ones worried about what are the new changes. Are we doing things correctly? I can't tell you how many times I've had a customer just say, I just want to do it right. Everyone just wants to do it right. At the end of the day, you don't want to have problems with the Department of Revenue. You don't want states knocking down your door, sending you letters. So that's why we're here. All of our logic is baked into the solutions that we provide. So everything we've gone over today is already live and ready to go in our system right now. We take all of these changes into consideration. We have about 200 people that monitor these changes every single day and change them into all of the products that we offer. And also, we even go a step further, put our money where our mouth is. So if you're an Avalara customer in good standing, we will cover any fine or penalty that you may receive from an outside state, as long as you've been a customer in good standing with us. So we'll actually cover that. So the solution really is an insurance policy and automation all in one when it comes to the risk of sales tax compliance. And then just a couple of other quick tidbits here. $54,480 is the average penalty for small and mid-sized businesses as a result of going under an audit. $3,640, the average cost of managing the audit process. 48% of respondents who identified sales tax rate or rule errors as a top cause of audit penalties. 41% of respondents said audit penalties were triggered by missing exemption certificates. So these are all things that we can handle within Avalara. And then also, when is a good time to switch? Obviously, we covered a few. Staffing changes, business growth or decline, ahead of a financial event. I can't tell you how many clients that I've had in the past where they were going to look to sell their company, but the price for their company or the deal fell through all because of their sales tax liability. So it's obviously not anything fun to jump into, but it's certainly necessary to evaluate where your company currently stands with economic nexus, physical presence nexus, what your plans are for the future, how you want to grow, and all of those things. And just a couple things about Avalara as well. We've been in operation since 2004. More than 31 million documents and certificates managed by Avalara in 2022. Over 1,200 signed partner integrations, 17 offices around the world. Just to brag a little bit about my company, and here are some of the things that we cover as well in our product line. And that's pretty much it for me.
That was great, Jared. Thank you.
Yeah.
Just wanted to piggyback off of some of your comments. One of the reasons we partnered with you with Avalara was because, you know, you have the latest intelligence, the most up-to-date sales tax information for something like 20,000 localities in the US alone, 70,000 worldwide. You're really the leader in sales tax automation. So that's why we've chosen to partner with you. We do have one question that came in. Does using a third-party payment company, credit cards or something like Bill.com, eliminate the need to provide payees 1099s?
That's a great question. I'll need to take that question offline. The 1099 function is something we're expanding into. We just purchased the 1099. Track 1099 is a company that we purchased, and we're kind of making it our own. But I'm almost positive we have a direct integration with Bill.com for the 1099 tool that we provide, which automatically will tell you whether or not a 1099 needs to be collected from your contractor.
Gotcha. Thanks for that.
Mhm.
Well, I'll give it a few more seconds just to see if we have any more questions that come in. I don't see anybody typing. So
Um,
looks like that's about all the questions we have. I want to thank you again, Jared, for bringing such an engaging session. I want to thank our attendees for their time. If any additional questions arise post-webinar, or if you'd like to learn more about Avalara and AvaTax, let me just share my screen here.
I'll stop
You
sharing.
can
Oh, there you go.
Thanks. You can feel free to reach out to us at Out of the Box, and we can connect you with a dedicated service rep who can get you connected to Avalara, maybe do a test drive of the product. Um, as a reminder, this recording will be shared with you later this afternoon. We look forward to seeing you on our next webinar. We're going to be reviewing what's new in QuickBooks Online. That's scheduled for 2 weeks from today, January 30th at noon Eastern. Registration info for that webinar will be included in the follow-up email going out to you, and is also located on our website. So thanks again, Jared, and
Yeah,
we'll
thanks for
be,
having me.
yep, absolutely. Have a great day, all.